Hi and welcome to the Trade of the Day for the 14th of October. My name's Tom. I'm a senior trading analyst here at Trend Signal, and I want to run you through the fun that we had on Friday's market in the wake of Trump's announcement of tariffs against China, and a couple of trades that we took in about 40 minutes that wound up making us the best part of about 250 pips. So let's run you through it. For a bit of context, we've been teaching people to trade intraday markets since 2003. And at the end of this session, I'd like to invite you along to watch us trade this market live, and you can trade alongside us and learn a little bit more about managing these sorts of markets. So let's go into our first trading opportunity. Now, we have a couple of different types of trades in this intraday system. The first one is called a standard trade. What I'm going to do to make it a little bit clearer what I'm talking about, I'm going to draw a couple of lines onto the screen. What it will be, our red indicator will show us the stop loss on the position or take profit as we move it throughout the duration of the trade. The purple will be the best possible move that you could make if you were an absolute top tier trader. It's not necessarily a realistic expectation, but it is on the table for those who are actively managing. And then we'll go for the green line, which will give us our entry. Basically, we'll look at two different things. We'll look at the best possible move, and we'll look at the kind of the worst possible move we'd realistically expect someone to take on these markets. Now, we have a 5-step process for identifying trades. I'll run you through them quickly. When we have an arrow, you can see these trailing arrows hitting a candle, it flips over and we start to look for a new type of trade. Now, if it's inside the bracket, inside this blue, it's below it, we're shorting the market. This tells us that we're looking at what we like to call a standard trade. There's a few extra steps to find this out, but the important part is that this becomes our initial stop loss. So we'll put the red line in line with that arrow. If everything else lines up, we then get an entry, which we'll highlight with the green line. We need red vector averages supporting the short sell motion. This is basically looking at lower time frame momentum. It's red, which is all good. We then look for candlestick position. Now, when the arrow is below this blue line and not above it, we like to have it in the bottom 25% of the price channel, which is below this purple line called the PE2 that you can see here. We then need to look to something called the R ratio, which you see in the left-hand side. I'll highlight it to make it a bit clearer. This needs to be above 0. Now, this time it's 766.5, which is absolutely massive. So that's all good. And then finally, we need to look at the intermediate trend. Now, believe it or not, this changes between orange and blue. It's solidly orange because the markets were absolutely nuking through the floor at this time. So everything's lined up in favor. We can get an entry, and as long as we have those conditions, we can enter on the open or the close of the candle, whichever comes first. In which case, we look to enter here where the green line is. The open of this candle, red bar, so we start at the top. From here, we then run the trade, adjusting our stop loss down to these black arrows as they progress. They bring risk off the table. About 12-14 minutes in, we go to about break even before finally locking in profits before the market starts to move up against us. It's never going to move in one direction. It's always going to have pullbacks and then resume its movement if it wants to go in a straight line. So we exit here. But our best theoretical performance is exiting at the bottom of this red candle here. Now, some of you may be familiar with this from candlestick patterns. We won't get into it today, but seeing this, then a big green candle, it's not surprising that the trade eventually started to turn back against us and we locked out our profit. To put this into context, this move here, so from the entry of the green line to our eventual exit of the red line, was 96 pips worth of movement. Pound per pip, nearly 100 quid. For what was essentially about 22 minutes worth of work. Our best theoretical performance to the purple line, you're looking closer to something in the region of about 300 pips worth of movement. I haven't calculated it exactly, but it is quite a lot more on the table to grab. This wasn't actually the best opportunity of the day, though. The best opportunity was generated through what we call a continuation trade. So let me just drag my lines up, which occurred here. So what happened? We entered into a sell trade, and this is very compressed, so it may be hard to see just because of the size of the movement we saw afterwards. This is actually an example of a trade that turned against us. So we entered for a sell, we hit the bottom of the range, it turned back up, we'd have exited for a small loss, and then we wait. However, before we get the flip over for a new trade, we then see a massive red candle piercing through the middle value of the back where these black lines are and this blue to orange change color, in line with the red vector average change. This is what we call a continuation trade. There's only two factors for it: intermediate in our direction, in this case orange, and the vector average is turning into red. What this gives us is not an entry at the start of the candle, because these candles, these vector averages weren't red at that point. They were probably still green. We get it at the close of this candle. So let's plot that out. We get our initial entry point where the green line is just there. Now we have a stop. We do this at the top of the range. Now there's two options. You can go for top of the candle or top of the vector average candle if you want to be a little bit more safer, give it a bit more room to breathe. And finally, we have our theoretical best performance, which is all the way down here. Now, these markets move something in the region of about 500 pips from the top in the space of about 6 minutes. It was really fun to watch live. I was actually in a live trading room at the time. Our best performance, if you'd have held it to the absolute bottom, perfect robotic trader, you'd be looking at something in the region of about 405 pips worth of return. If you were just following the black arrows, taking the stress out of it, you go 2, 4, 6, 8, 10, 12, 14, 16, 18, 20 minutes. We eventually come out for a total of 161 pips. Again, to put this into perspective, if you were trading both of these trades, which is less than 40 minutes work combined, trading at £1 per pip, £257, trading at £2 per pip, £514. As you can see, you don't need to be trading with enormous sizes to make this turn into some pretty serious cash. And while these kind of drastic moves aren't available every single day, there's plenty of smaller moves where we're taking 40, 50, £60 at a time. So trade for a couple of hours and you can really turn this into a full-time income. If you'd like to see us trade this live, we host several live trading rooms a week. We actually have one tomorrow at 7 o'clock. We will not only show you how to use the strategy to risk manage appropriately, but we'll be taking the trades in front of you, entries, exits, and providing commentary the entire way through. So you can learn to trade the intraday. More importantly, you can hopefully take some money away from the intraday by the end of the session. If you're interested, there'll be a form around this video. Come and join us. We take questions the entire way through. And I hope to see you soon. Bye-bye for now.